Hey everybody, what's up? It is Monday, May 18th. I just sent out the new edition of MMT Trader. If you want that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. I got the link right here in the description below. So we had a big up day, up 911 points in the Dow. You know I've been bullish this whole time. I've been talking about the fiscal support. It is unprecedented. And you know, that's something you really have to pay attention to. The economy is opening back up. I do not see right now, I'll just be very open and honest with you, I do not see right now any evidence in the data of an economic pickup, but it's still early. I mean, we just started to see the opening of states and the relaxation of some of these lockdowns and restrictions, so I'm pretty sure we will see the evidence. A day like today obviously is going to bring down that put-call ratio. We're probably now getting closer to a level that at least technically might indicate a short-term top. However, when I look at something a little bit longer term, like the AAII weekly sentiment survey, that thing is still really, really negative. And most important thing there is that bull minus bear spread, the bull-bear spread, which has been negative for 12 consecutive weeks. And I said you got to go all the way back to 2008 to see a stretch, a weekly stretch that extended. So that's going to take some time to turn around, and I can pretty much assure you that when this thing reaches some kind of a top, and by the way, I don't think we even should be talking about any kind of serious, meaningful tops right now, because with the amount of fiscal support that has been injected into the economy, and it really, really is massive and unprecedented, and it's a lot different than the fiscal support we saw in 2008, 2009. I mean, this is going to people, this is going to, I would say, more needy parts of the economy. You look at, for example, unemployment benefits with that extra $600 a week. Unemployment benefits up about 114 billion. You know, last month, April, unemployment benefits total were 17 billion. We had now almost 100 billion increase in a little over a month. If you look at the stimulus checks, and that is accounted for in the IRS individual tax refunds, that's the line item in the daily treasury statement, over 400 billion. So very, very powerful. And also some of these loans, particularly commercial and industrial loans, which have seen an enormous increase, those are primarily the payroll protection plan and the economic disaster loans, the EIDL, I believe they're called. Those are government guaranteed, and I think those loans don't have to be paid back if you meet certain criteria. So this is all fiscal support, very, very powerful, extremely powerful. I'm just waiting for the data to, I mean, we're long the market. By the way, I'm getting a lot of nice emails from subscribers telling me how fantastic their accounts are growing. They're making a lot of money. They're really happy, and I'm really pleased for everybody because that's great. Let me mention, because I had somebody, I think it was, several weeks ago, maybe around April 30th. I have to go back and check, but I said we were buying silver. Now, I don't talk too much about silver. You know, we are long gold and have been long gold now for quite some time because I follow what commercial traders do in gold. They've been buying every dip, but silver caught my attention down, and I said if it hits from 1490 to 1475, you got to buy it. We did dip down there. I believe it was around April 30th. I had some commenters here saying, oh, Norman's talking about silver. that must be the time to sell. If Norman's talking about silver, well, it's up over $17 right now. That would be over $5,000 per contract in the futures market. So that was a big, very nice move. And it's also reflected in very strong gains in mining stocks. Just wanted to throw that out there. Oil, same thing. Been buyers now, market up over 32. The end of the lockdowns, and I've been talking about the OPEC cuts. We saw our first drawdown, in 12 weeks or maybe longer than that in the last EIA report. I've been mentioning or citing the pickup in gasoline demand, gasoline production. So that is in a bullish mode right now. And I don't think we're anywhere. Also, by the way, I should mention the drop in U.S. domestic production, which has been very significant. And I think we're just really in the early stages of seeing inventory draws. And you could also look at the term structure of the crude market right now in WTI. I mean, we went from a steep, extreme contango. Contango is when futures prices are above nearby prices. And remember, we had that whole one day bizarre negative crude price on what was that, April 20th, April 21st, something like that, when it was the expiration of that May contract. But that term structure has flipped around. We are now in backwardation. The June-July crude spread is positive. So we are very likely looking at a deficit, a supply deficit in the second half of the year. So things could get really, really interesting, let's put it that way, in the second half of the year. So that is basically the situation right now. The House of Representatives passed a new stimulus, a $3 trillion stimulus, but that's going to the Senate. I don't think it's going to go very far there, but who knows what will emerge. There's still fiscal in the pipeline that is yet to come out. Some people still haven't received their $1,200 checks, so that's going to continue to flow. It's very positive. Let me mention one more thing. It was, and I wrote about, it was funny because I wrote about this today in MMT Trader, and then I saw it on the Washington Post afterward. Remember that $450 billion, which was part of the first stimulus bill, the CARES Act, the $450 billion, which was basically a capital infusion to the Fed. That was talked about by Treasury Secretary Mnuchin and Larry Kudlow, White House economic advisor, say, oh, the Fed's going to leverage that up 10 times. And I made a video about that at the time. Maybe I made a couple of videos about that because I said that capital infusion was needless, it was useless, it was ridiculous. The Fed doesn't need a capital infusion. It has never happened before. If you recall, the Fed took over all of Bear Stearns' portfolio in 2008 without a cap. I mean, there is nothing in the Federal Reserve Act that requires a capital infusion or backstop for the Fed. There is nothing precluding the Fed from lending to any entity. It says right in there in the Federal Reserve Act. Nor does it say anything about the Fed not being able to run with negative equity. Now, that might be unpalatable politically, but there's nothing financially or operationally prohibitive against that. There's no problem with that. So the thing is that $450 billion that the Treasury handed over to the Fed, which was a very sizable chunk of that stimulus, that was supposed to go on to create, what, $4 trillion in loans? They were talking about that. That was all hyped up. So far, $114 billion. And while that may sound like a lot, that is minuscule in comparison to what we were told, but also minuscule in comparison to most of the other line items on the Fed's balance sheets. I mean, just for one example, if you look at the Fed's, those Forex swaps, those central bank liquidity swaps, that's $440 billion that the Fed has been lending out to basically foreign entities, foreign companies. No backstop provided there. No backstop provided there. So come on. Again, just a snapshot of how the whole system is being run by incompetence. All right, everybody, go to my website, get the new issue of MMT Trader. It's out today. See everybody tomorrow. Bye-bye.